Hi, this is Gautam. Today, let us going to see the subject name is Accounting for Cost and Management. In that, the topic is comparative statement. What would be comparative statement? The meaning of comparative statement is nothing but the comparative statement shows the financial position of a company. At the same time, financial position of a company for a period of time. It may be for the year of like 1 year or 2 years. Like here, let us see 2003 and 2004. Now, what it may comparative analysis means it should be state over with period of time. It should be period of year for more than 1 year or anything else. So in that, there are two types of comparative statements are there. The first one is comparative income statement. What do we comparative income statement means? It should be full concurrent with income. The company's income statement should be given in the particular period of year. For example, maybe 2005 or 2009 like that. And the second thing is, we want to, with this analysis of income statement, we are going to prepare a comparative balance sheet. So balance sheet is nothing but what are the liabilities and what are the assets and what are the expenses we are recording in the firm. And then finally, what the profit should be we gathering in the company. So let us here see the sum about comparative statement. These are the sums. Here in this sum, they are given the period of 2003 and as well as 2004. Let us see the sum. Here, the first one is they are giving sales. Here, for the sales for the year 2003 is 1000. Here, and then 2004 the sales should be 1400. How we are going to give a percentage here? How we are mentioning 100 means at the first the sale should be happened. Every the base year should be. This should be base. The 1000 should be base. We are going to giving the assumption of consider as 100. For this 1000, we are going to give a 100 and as well as for this 1400 as well as we have given 100. This should be the base point. This should be the base point. According to this, the second one is at the sales. Sales should be nothing but bulk sale. It should be our random sale like that. With this sales, we are going to list cost of sales. Here, cost of sales should be for their 2003 is 650 and then as well as 2004 is 1020. We are going to give a percentage. How we are going to give a percentage? It's nothing but it's a simple calculation. Here, the 2003, period of 2003, the cost of sale is 650. This 650 we want to divide by 1000 because this 650 we are going to divide it into 1000 and into 100 means we will be getting 65.00. Should be percentage. And then second one is 1020. At the same time, this 1020 we are going to divide into 1400 into 100 means we are going to give a 72.86 is the answer for cost of sales. And the final thing, sales minus cost of sales, we are going to get a gross profit. So gross profit is the main sources of the company. With this gross profit, we are going to give some expenses cost. Here, the expenses cost is office expense and another one is selling expense. At the same time, either for the year 2003 40 and then 2004 is 50. We want to divide this 40 by 1000 into 100. We will be getting 4 like that. We want to do some percentage calculations. With this office expense and selling expense, we want to add this and finally we get total operating expenses 500 and then as well as here also 140. With this we want to give you a percentage trend analysis like that. This should be the comparative statement of this thing. And then finally with this expenses, with this gross profit and with this expenses we are going to minus things, we are going to be getting a total operating profit. So total operating profit of the company for the year 2003 is 250 and as well as 2004 is 240. Finally, miscellaneous income. Nothing but miscellaneous income means you should be getting back to the company. That should be maybe income or profit what should be going to gain in this company. So getting this part of company. Okay, with this statement, finally we are going to list non-operating expenses. Here the non-operating expenses interest for the year 2003 is 50, the last 2004 is 60. With this, already we have miscellaneous income 290. So 290 minus 50 will be 240. This should be net profit. How we are going to do a percentage? With this 240, we are going to divide this 1000 into 100. This should be the base core area. Finally, we are going 2005 is 2 grade. This should be the concept of this. So this should be the comparative analysis of the income of the for the year of 2003 and as well as 2004. Thank you.